Hi and welcome to HC Media Group Financial Training Course. In this series, I'll be training you on several different topics, one of which is how to build a business plan. I'm going to teach you how to build a proper business plan and dispel the myth that it takes weeks and weeks and weeks to put together a business plan. That's simply not the case. And again, if you follow the process that I've outlined in the training course, it really is quite straightforward. And later on in the series, I'll be training you on the difference between a sole trader versus a limited company. So what are the benefits of each? And more importantly, which one of these is going to best suit your business? I'll then teach you a little bit about digital accounting software. So again, going through all of the digital accounting software platforms that's out there, so like Xero, Sage, etc., and I'll tell you the benefits of each of them. So again, you can make an informed decision as to which is the best digital accounting software for your business. Later on in the series, I'll teach you around how to produce an invoice and how to produce an invoice correctly. And by that, I mean what information legally needs to be on an invoice. How do I know who has paid and who still have to pay? Again, I'll share with you some of the top tips that we have here at HC Media and making sure that all of our invoices are paid and we know exactly who to follow up with and who not, obviously. Then I'll teach you about corporation tax. So is your business liable for corporation tax? If it is, how much is it? When do I pay for it? Etc. I'll then teach you about profit and loss. Really important that you understand the profit and loss. And I have a really simple guide to be able to enable you to be able to read your profit and loss statement as effectively and as easily as you possibly can. So that's profit and loss. I'll then teach you about balance sheet. So what's a balance sheet? Why do we need it? Why is it important? And in addition to that, I'll teach you around how to work out your break-even point. So what is a break-even point? Why do I need it? Etc. Again, I'll teach you all of that around how to ensure that your break-even point is correct. And one of the most important, I guess, is how to work out your gross margin to your net profit. Let's face it, we're all here to drive forward our net profit. And again, I want to make sure that you fully understand how to get from gross margin to net profit as effectively and efficiently as you possibly can. So quite exciting training courses in our finance section. Today, we're going to be looking at business plan. So how to produce a business plan for your business. Dispelling the myth that it takes ages and it's so time consuming, because it's really not. And again, I'm going to show you in more detail. If you follow the process today, it really is quite straightforward. My name is Joe Hamilton. I am an award-winning author in business. I do have a book out there on the lovely Amazon. It's a digital marketing book. It's titled, wait for it, Cake. Why cake, I hear you say? Put simply, cake is because it's got all the ingredients that you need to be a successful marketeer. So again, a really good read. I would say that obviously being a bit biased, but it really is a good read. It's out there on Amazon and it's called Cake. I'm the managing director of HC Media Group. So HC Media Group was set up about 2 years ago now, and we're the fastest growing marketing agency in Essex. We moved into some offices in Colchester about 10 months ago, I would imagine now, and since then it's just gone from strength to strength. I'm really proud of our business. I myself personally, I've managed over 200 retail stores, looking after their finance, the human resources, business management, people management, etc. And my specialism is in growing businesses through finance and business management. And some of the people I've worked for, so you may, some of these brands will be quite familiar with you. Started off with Whitbread. Whitbread Inns, really enjoyed working for Whitbread. Quickly moved into Thresher, who you may remember. Thresher was an off-license chain, huge off-license chain, one of the biggest in the UK. And I started off in Romford. I started off as a branch manager in Romford for Thresher, having about 10, maybe 12, about 12 staff, and worked in the business for, 4 years or so, and then quickly got promoted to area manager, and from area manager into regional management with Thresher. Really, really good company to work for. I then got a bit of itchy feet and decided, well, maybe maybe I can share some of my knowledge in some other UK businesses. Moved in with the Co-op, again area manager with the Co-op, again a really, really good business to work for. And quite recently I've worked with Well, who is a well-known pharmacy chain within the UK, numbers of stores up and down the country, and I worked with them for about 10 or 11 years, I guess, as an area manager in Essex and North London, and all the difficulties that brings with about 25 stores and about 260 staff. Again, really, really good business, really profitable. And I left Well to set up HC Media, and boom, here's where I am today. In addition to that, I have worked as a consultancy basis for a number of smaller businesses. And some of them only 4 or 5 employees, but again, looking at their profit and loss, and making sure that they're getting the best out of the resources that they currently had on board, and how to build and how to drive that all-important net profit. So that's just a little bit about me. If you do like to get in contact with me on a one-to-one basis about the training course we're about to go on, and indeed if you just want to have a chat, by all means please do. It'd be great to have a chat to you, and just email me on team@hcmediagroup.co.uk. So again, just if you wish to write that email down, is team@hcmediagroup.co.uk. Again, it would be fab to talk to you. So, business plan we spoke about is really quite straightforward as long as we follow the process and the layout structure. So the business plan layout is really straightforward, and it doesn't need to be war and peace. In the first section of your business plan, it's just a description about your business. Moving into a little bit about the forecast. So how much money are you forecasting to take in 6 or 12 months' time? And the structure of the business. So again, is the structure a limited company? Is it going to be a sole trader? Then talk a little bit about the product or the services that you're hoping to sell. Moving into a marketing plan. So how are you going to get your business to market? And talk about a SWOT analysis, so the strengths, opportunities, and weaknesses and threats within your business. Talk a little bit about operational detail and any other financial information that you believe is relevant. Then this is the place to put it into your business plan. So we're going to look at these in a little bit more detail as to what needs to be included. And remember, it is not, it's not war and peace. This just needs to be a brief description of your business plan. First of all, I think it's important that we understand what a business plan is. Put quite simply, a business plan is a written document that describes in detail how your business is going to achieve its goals. Simple. And the business plan lays out, a written plan, as I say, around marketing, finance, and an operational viewpoint. But the business plans are really important to allow a company to lay out its goals, and put some measures in place, and measures of success, so as it can attract investment. So that's the biggest thing about a business plan. The whole idea of it is if you do need to attract investment. And because of that, it needs to be set out in a certain manner. A business plan, For a new startup, you can do it for 12 months. Which is not an issue at all, albeit, again, if you're looking for finance, 3 years is generally the norm. And in some instances, people have put a 5-year plan together. And the whole idea of your business plan, apart from looking for finance, is that you can measure its success. And you may want to think about your long-term goals. So your long-term goals in 5 years' time might be similar to HC Media. We want to be the biggest and the best digital marketing agency in Essex in 5 years' time. So that's your long-term goal. But then you need to break down your short-term goals, so your stepping stones, if you like, over that period of time on how you are going to achieve your long-term goals. So a great measure of success for you as well is the business plan, and it needs to be kept alive. But again, we'll go into a bit more detail now in the next slides as to what needs to go into that business plan under each of those sections. So the first one for me is about business description. And again, guys, there is absolutely loads of platforms out there and loads of templates on the internet that's got a business plan template for you. So the bit that you're looking at in the first instance is business description. And this is really easy. It's simple. All you need to put in a business description is your name, your address, a brief history. So how the business was started. So what possessed you to start the business? What inspired you or encouraged you to start the business? And how has it evolved since? So what's changed since starting up the business? And any achievements that you have to date. So that could be around, a big client that you took on board. It could be around contracts that you're about to sign. If you've been nominated for any awards, just needs to go into your business description bit. Simple as that, honestly, and it doesn't need to be, as I say, War and Peace. The second section is around business forecast. So this is the measurable goals. So measurable goals around, so it could be as simple as sales, some costs, staffing, and the objectives for your business. And it's really important that you put some timelines in there for achieving both of these. So a goal, for instance, so the goal is to achieve, let's say, £10,000 worth of sales within the first month. And an objective is how this is going to be achieved. So that's the difference between the goals and the objectives. If I can put that easier for you, let's take a restaurant. So a restaurant's goal might be to be overbooked every night for the next 6 months. And their objective will be to hire a skilled chef with the ability to impress customers and reviewers. So again, that's how you would put that together. That's the difference between a goal and an objective. But it is important to put some timelines to be able to achieve both of these, so as you can measure the success and when you have achieved each of those. The next section is around business structure. So again, quite simply, so how the business is owned and how and managed. So by that, have you got managing director in place? Is it a sole proprietorship? Is it a partnership? Is it limited liability partnership? Or as I say, limited companies? And how the decisions are made. So does one individual have overall say? Is it that all the parties involved make a decision collectively? So it's important to put that into your business plan. So whoever is looking at it fully understands that it's a cohesive message coming out, and cohesive decisions are made. Again, products and services, really, really simple. And you put in here the primary products or service that your business will provide. So for instance, when we put our business plan together, our primary product was SEO, so search engine optimization. So that was our primary product that we were selling at that particular time. And because of that, that's all we put in there. They were the products that we were going to sell. Sorry, that was the product we were going to sell. The fact that we added products afterwards, like website design, lead generation, training, etc., that followed afterwards. But the primary product for us was SEO. So again, you'll need to put in your primary product into your business plan. Marketing. Again, it's really quite straightforward, your marketing plan. So identify who your business target market is. Do a little bit of research. Identify who they are. Who are your competitors and who are they likely to be? More importantly, what are you going to do differently to be able to beat the competitors and to be able to increase your customer database and take them away from your competitors? Include your pricing strategy. So again, work out what your pricing is going to be, and bear in mind sometimes that you don't have to be the cheapest in the market to be the best. A lot of the time, it's the perceived value that a customer wants as opposed to being the cheapest. So bear that in mind, that sometimes cheapest is not always best. And advertising strategy. So where are you going to market it? Is it going to be Facebook? Is it going to be radio advertising? Where and when and what are the costs of advertising to get your brand to market? So as I said, just a note on that, be sure to include the cost of marketing into the retail price of your product. So that's just a little bit of a marketing plan. And again, it doesn't need to be reams and reams of paper. A SWOT analysis. So we talk, crikey, last time I heard SWOT analysis was probably at school, I can hear you say. So SWOT analysis, quite simply, is strengths, weaknesses, opportunities, and threats, put simply. So again, a detailed description of your business's strengths. So your strengths are around your people, it could be your location, it could be the fact that you are first to market a particular product, so that would be your strength. The weaknesses, again, highlight some of your weaknesses. So it could be around that at this moment in time, you probably need 10 staff to be able to complete your goal or achieve your goal of X amount of pounds. That's a weakness at the moment. However, it is going to be self-generating. So the more sales we have, we're going to invest it back in our people. So as we start to increase our staffing to be able to deal with the uplift in sales. An opportunity might be around, this opportunity could be fantastic to be able to sell our product abroad, and some of the threats would be around, and again, you need to be open and honest with yourself here, that some of the threats could be around a patent, or it could be around other competitors coming into the marketplace, and if they do, what are you going to do to make sure that you're still in the number one spot? So that's just a little bit around SWOT analysis. And finally, sort of, the operational detail. So operational details is a description of the business's day-to-day operations. So what happens on a daily basis? If, for instance, you have at the start of the week, what we tend to do is we order in from abroad. By the time that gets into us on Wednesday, we make sure that it's packaged, it's branded, etc., etc. We get out to suppliers on the Friday, and this is the cost of making sure that we get it from A to B. So that type of information needs to go in there. So again, a brief description of the whole operation of the business, which will include some outside suppliers, and talk about your current staffing arrangements. Again, really quite straightforward, and maybe what your staffing requirements are for the future to make sure that you hit those goals that you've set initially. And that is probably it as far as your business plan is concerned. So really, really quite straightforward. So some of the financial information. So as far as sales forecast is concerned, so if you're looking at sales forecast, you always start with your sales forecast, and you probably need to set up a spreadsheet projecting your sales over the course of 3 years. And set it up in columns for every month. So even if you just do it just for 1 year, so your sales forecast for January, February, March, April, and so forth, and so put your projected sales in on a month-by-month basis, particularly for the first year. And for year 2 and year 3, if you're doing a 3-year business plan, you can put them in on a monthly or a quarterly basis. But you do need to include the cost of the product, and and the cost of those sales into your forecast, because you want to be able to calculate what is your gross margin. That's really, really quite important. So your gross margin is your sales less your cost of sales, and it's a really useful number when you're budgeting. And again, on our profit and loss training section, I'll go into a lot more detail around gross margin, what it is, how you work it out, etc., etc. The cost of sales. So again, on your financial information, so you're going to need to understand how much it's going to cost you to actually make the sales that you've forecasted. So you'll need to differentiate between fixed costs. Now, fixed costs are the likes of rent, rates, payroll, etc., etc. And variable costs are advertising, promotional expenses, and so forth. So you need to know all of these expenses, because the lower fixed cost means less risk, of course, but there's also more bottom line profit. It's easier. I found when I was doing my profit and loss that if you work your fixed costs and your variable costs out as a whole percentage of sale, it was far easier to forecast in the future. And a top tip here is it combines. So your expenses, so your fixed costs and variable costs, shouldn't exceed 65% of your gross sales. So again, just the top tip, those variable costs and fixed costs shouldn't exceed 65% of your gross sales. That's really, really quite important. As far as break-even analysis is concerned, again, for an investor, the break-even point is when the business expenses match your sales of service. So if your business is viable at a certain period of time, your overall revenue will exceed your overall expenses. So this is an important analysis, particularly, as I say, for investors who want to know that they're investing in a fast-growing business. And additionally, it's really important for you to understand how much money you need to take as far as cash terms is concerned, just so as you can break even. So again, it's important that you understand costs versus the break-even point. As far as your income projections are concerned, this is your profit and loss statement. So detailing forecasts for your business for the coming year or the coming 3 years. And again, use the numbers in your sales forecast that you put in initially in your business plan. And to be able to take off the cost of sales and expense projections to get to your net sales. So net sales is, again, sales minus cost of sales is your gross margin. I can hear your brain going, oh my God, how am I going to model this? But rest assured, this is fully explained with diagrams, I might add, in our training on profit and loss, which is later on in this series. Okay, Your business plan should be updated whenever something changes. So, such as, I don't know, introducing a new product. So, for instance, we at HC Media, we introduced pay per click, and we also introduced some social media marketing. And because of that, what we done was then we updated our business plan. We done some market research, et cetera, and put the projections and everything else into our business plan. So we kept it alive, and it's updated on a regular basis. So the top tip is to keep your business plan up to date and current, really, as it's a useful tool to help you stay on track and be able to measure your success. But also, should you need an additional injection of cash, don't forget the first thing an investor will ask you is, have you got a business plan? And that's it. That's it for your business plan training. It really is quite straightforward. It shouldn't be anything that you should shy away from. If you do need to talk to me about the subject that you've just heard, then by all means, please just email me on team@hcmediagroup.co.uk. I would only be too delighted to talk to you. I hope you've enjoyed this part of the course. I've been Joe Hamilton. Thank you for listening.